Hey, welcome back to Business 101, Introduction to Business. And in this continuing series of lectures on the topic of accounting, we now turn to the topic of the accounting equation. There is a primary equation that rules and dominates everything in accounting. And this is the right place to start as we talk about specifics on how to follow the money. This is a pretty crucial concept. It's in fact the concept that all of accounting rests on. So buckle in. Let's see if we can learn something about how accounting works. The central premise of accounting is that there is a central equation that always must balance. No matter what, both sides of this equation must always balance. So let's talk about this equation. The equation that must balance is that assets on the left-hand side of the equation always have to equal the sum of liabilities and stockholders' equity on the right-hand side of the equation. And you see it illustrated here in this very basic diagram. Let's describe that just a little bit as you take a look at this picture. Assets, those are economic resources that are owned by the business. Now, they can include all sorts of different categories. We'll talk about that a little bit in the next slide. But no matter what the level of assets you have, no matter what nature they take, whether they're cash in the bank, or whether they're land that you own, or whether they're inventory in stock, or whether it's a factory, all of those assets, all totaled together, have to equal, well, you see it on the right-hand side. Liabilities, which are the financial obligations or debts that a business carries, and the owner's claims on the assets of a business. That's the last part. Stockholders' equity is a little bit of an interesting concept, but we'll talk about that in the next slide and maybe it'll all fall together. So, an asset, any economic resource expected to benefit a firm or an individual who owns it. Now, if you take this from your personal life, you know that you have certain assets. Assets like the cash that you have, either in a jar, in your bedroom, or in your checking account, in your savings account. Or assets can be other things. Assets can be the automobile that you own, that you drive to school and back or to work and back. Any of those things are assets, and they all have some sort of a dollar value that you can assign to them. A liability, on the other hand, is a debt owed by the firm to an outside organization or to an individual. For many of us, think of it from the personal perspective. We own a car, we drive a car, however, we have a loan on the car, and so we are still paying a debt that is owed to somebody else. That loan is a liability. And finally, the third category, owner's equity, the amount of money that owners would receive if they sold all of the firm's assets and then paid off all of its liabilities. So when you consider this equation, you think about this idea of owner's equity. What would be, quote unquote, left over if I were to liquidate and sell all of my assets and then pay off all the debts? What would I have left over? Well, that's what I really have in terms of ownership in this entire enterprise. That indeed is the concept of the accounting equation and, quite frankly, the very concept of owning a business. There are some folks who are the owners of the business. Legally and morally, they own the business. And in order to own a business, well, what do you mean you own a business? It means you own all of the assets of the business and, quite frankly, you're responsible for all the liabilities of the business. Well, those things have to balance out. In other words, all of your assets totaled together equals the liabilities, and then whatever is left over out of that, that belongs to you. That's really your liquidatable stake in the business. Now, as this is just an overview of the topic of accounting, what's really important to know as we move forward to talk about in the next lecture some important financial statements is to realize this principle behind it is that everything on the left-hand side of the equation must always balance with the items on the right-hand side of the equation. More about that as we look at financial statements in the next 2 videos. Hope this makes sense to you. More of this in the textbook as well, and we'll see you in the next lecture.